Meta Platforms just reported third quarter earnings, and the stock is absolutely getting smashed right now. If you're watching this video, you're probably trying to figure out, is this a time to buy Meta on the dip, or is this a time to stay away from a troubled business? I'm Jason Hall. This is The Smattering, and we're going to talk about that next. But before we do that, I just want to give a hat tip to our friends over at The Motley Fool. We get to do these videos because of our partnership with The Fool. If you want to be a better investor, check out our link, fool.com/The Smattering. Put in some information. The Fool is going to give you their 10 best stocks to buy right now. Definitely check that out. All right, let's talk a little bit about Meta's stock, okay? What's going on here? If we go back to the IPO, the day of the IPO, if you had invested in Meta Platforms and held that stock up to about a year ago, you were happy. We're talking about better than 800% in returns. A $1,000 investment the day of the IPO would have been worth over $9,000 about a year ago. It's not worth that anymore. It's been absolutely brutal. Stock is down now almost 3/4. So why is it falling? The short answer is that ad business. Again, let's face it, Facebook and Instagram are ad businesses. And if we look at the past couple of quarters, the second quarter, third quarter of this year, compare those to the revenue in the second quarter and the third quarter of 2021, revenue is coming down. There's even more to it because we have to focus on not just that revenue that's down, but we have to attach it to some actual numbers. So first thing, that revenue is a component of how many users are active on its platform and how much revenue per user it generates. Now we see that average revenue per user number the past 3 quarters has fallen, even as it's been relatively steady and stable with engagement with users. Okay? Why does that matter? Because this number right here is so incredibly important, and Meta has been the gold standard in average revenue per user, and that's starting to change. The reality is that this aligns with about the time that Apple made privacy changes, and Facebook couldn't follow its users around the internet on their Apple devices as they were doing things off of Facebook or Instagram or its other platforms. The reality is marketers no longer find the same value in Facebook and Instagram ads as they did even a year ago. Yeah, there are problems in the ad business right now. It's not a great time in the cycle with everything that's going on with the economy, with inflation, all of the pressures that are on consumers. But I can promise you the ad business is a lot healthier than the folks at Meta want you to think. All right, let's talk about why this really matters a lot. We've got another couple of slides that we want to share. I want to start talking about expenses, okay? So we look at the revenue, we look at operating income, and what do we see? So again, the family of apps operating income, that's basically ad revenue. We see operating income of $9.3 billion, still a gigantic number. Let's be honest, that's a massive number, but it's trending the wrong way, right? Again, 3 quarters in a row, that number's trending the wrong way. Now we look at Reality Labs, that's the metaverse business. What's going on? Operating loss continues to expand, even as the revenue at Reality Labs is very lumpy and fell substantially in the third quarter. All right. Now there's more to it. We're looking at the operating side of the operating statement. We need to look at what's going on with capital. And what's happening? CapEx is also cranking higher. Companies growing those operating costs, has hired a lot of people, has made a lot of investments in R&D to grow the scale at Reality Labs as it tries to scale that business up. But it's also doing things like buying billions of dollars of NVIDIA GPUs, expanding data centers, spending those capital dollars as well. Okay? Now we combine those, declines in operating income, declines in operating cash flow, and growing capital spending, and we see free cash flow of $173 million in the third quarter, by far the lowest free cash flow it has generated in years. Why does that matter? It matters a ton because we're seeing a company with pressures on its operating business and its ad business right now, And the best thing you can say about its engagement with users is that it's stable. But at the same time, we're seeing TikTok and other social platforms become more interesting and more engaging to younger users. And there's concerns about its cash cow business right now at the same time that it's investing billions of dollars in capital, cash off the balance sheet, and growing the operating costs over at Reality Labs without showing meaningful evidence that that business is growing yet. All right. Why does all of this matter? Because you have to start talking about valuation. We see 8.4 times earnings, 7.8 times operating free cash flow. If they can just keep things stable, that could prove to be a great price. It's obvious the market has a lot of negative sentiment baked into the business right now. I think there's no getting around that. But I think that negative sentiment is baked into the stock, not just because we're seeing some erosion of the value of its ad business. And again, at best, you can say that they have a stable, steady engagement situation with users. But the big thing is all of the billions of dollars that are being invested into its metaverse business without showing any meaningful benefits to the bottom line at this point. Don't think about it as a value stock anymore, because it could be a value trap, right? This is a turnaround story, okay? This is a business that's struggling. This is a business that's fighting some engagement challenges, some value challenges with how marketers think about the value of its ad business, okay? There's a chance that it could see further erosion of that as more information comes out about how effective those ads are. Maybe it gains a little bit of value in that average revenue per person if things continue to remain stable and it shows good returns for marketers. But we don't know if that's going to be the case. I would really caution anybody out there that's looking to invest in this business, thinking about it as a pure play value bet. Okay. The balance sheet is very strong. No doubt about that. There's plenty of cash there to continue to invest in the Reality Labs business. But here's what we don't know. We don't know if this massive tens of billions of dollar bet that's being made in the metaverse is going to generate meaningful returns for the company long term. We know what's going on with the ad business. It's challenged right now. Average revenue per person has come down. Engagement is stable at best. We're seeing other social media platforms out there that have better engagement with younger users, and they're seeing growth. We know what we have with Facebook, and we know what we have with Instagram. They're stable, they're solid, they do generate positive cash flow, but they're not growth engines anymore. Before you think about this as a value play, think about this as a turnaround with kind of an option on the metaverse, but it's a really expensive option. And if they continue to invest all of these billions of dollars without generating a return, it's going to weigh on the value of this business long term. If you invest in it, that's your cash in the balance sheet too. And right now, they're throwing that cash at a business that might turn into something big or it might not. Frankly, we're not going to know that for 3 years or more.